Meanwhile, the stock market had its worst week in more than a decade. It plunged more than 3,500 points on fears of the financial impact of the coronavirus. KPIX5's Devin Fehely has more on the economic outlook amid the expanding health crisis.
It's going to be very volatile, and I do believe that it's going to end in a red.
Wall Street's wild ride, a precipitous 3,500-plus point drop for the Dow, the worst decline since the financial crisis, is likely to get worse before it gets better, says analyst Neil Jasani.
I don't believe it's going to go that easily what we lost, and that keep in mind, it is very hard to recover the losses.
Jasani says jittery investors were responding to concerns that the wheels of commerce have been slowed significantly by the expanding health crisis represented by the coronavirus. The manufacturing, retail, travel, and tourism industries have all taken a hit. Several major conferences, including the Game Developers Conference, Facebook's Global Marketing Summit and F8 Conference, and Google's News Initiative Global Summit, have all been canceled.
We cannot take for granted that our citizens are safe and that our economy is immune from this global epidemic.
Silicon Valley Leadership Group CEO Carl Gardino made that dire pronouncement at the end of January, 3 days before the announcement of the first case of coronavirus in California, and long before the market's week-long tumble. There is concern about the ripple effect through financial markets as companies scale back or cancel non-essential travel, and the State Department urges Americans to avoid hotspots for the virus like China, South Korea, Italy, and Iran.
We are not going to go in a recession or depression, but that's been said, market is going to continue to be scary, continue to be volatile.
As investor anxiety spreads alongside the virus itself. Devin Fehely, KPIX5.